make sure you have 2 platforms and data feeds just so you have access to it. So going on over, we're looking at 10:30, 9:30 Central. Let's see, it's showing right now the time zone that we're getting. Want to get that is okay. So showing the opening time. This is this brings up just this complete side note, but a really important lesson that I had a trader recently sent in, and he thought he was completely getting hosed by Nadex's settlement value. And I mean, we've all been there, especially when you're doing a binary, and it's like a tenth of a tick off, and sometimes it's in your favor, and you're joyful, and then if it's off, you feel like you got screwed. I get that. It's just the nature of settlement, which happens on every exchange, including the CME. They have to use a settlement price, and we'll talk about settlement in a minute. But one of the things that I hadn't really thought about before when teaching traders is how charts plot their data. Okay? And different charts are going to have, they basically plot it in a different way. And let me show you an example of what I mean. I'm on just a 1 hour chart of oil here at the moment. And I want you to show you the current timestamp is 12 o'clock. Okay? So the current timestamp is 12 o'clock. And the way it's plotting the timestamp is the open of the bar. So just understand that that's pretty much how it's set, how it's doing it. And showing, right here, the actual time is 12:12. So, we're lining up again over here with Eastern time. So we are looking at Eastern time, but it's showing at 12 o'clock. Why does that matter? It's plotting the timestamp as of the open of the bar. Okay? So, well, if you go over to other platforms, many platforms will plot it as of the close of the bar. So let's say, Ninja Trader, as an example, went on this exact same bar, it would show 1 o'clock on a 1 hour bar. So it's showing from, 12:01 to 1 p.m. Okay? Whereas Thinkorswim is going to show from 12 to 1 p.m. That doesn't sound like a big difference, but let's say you're going in, you're looking at the 12 o'clock expiration. Right? Then you may be looking at this expiration, or let's say you're looking at let's say you're looking at the 12 o'clock expiration. You're looking at this bar, well, actually, and you're looking at the close of this bar thinking that's the 12 o'clock expiration. It's not the 12 o'clock expiration. It's the 1, at the end of the bar, it'll be 1 p.m., okay? Well, is when the new bar will start. So you're actually looking at the expiration is the close right there of, if you're looking for the 12 p.m. expiration, you're looking at the wrong bar. You'll be looking at the 1 p.m. expiration if you're going to think it's someone at the 12 o'clock bar. Okay? If you want to see what was the price at 12 o'clock, either need to look at the close of this bar, open of this bar, depending on the gap right there. But basically like the 11 to 12 bar versus the 12 to 1 bar. So again, Thinkorswim showing you the open of the bar as the timestamp, representing the time of 12 to 1. Ninja Trader showing you the close of the bar as the timestamp, so therefore it'd be showing you 1 p.m. being 12 to 1. Both are showing you 12 to 1. It's just one has a 12 there and one has a 1 there. And that can be really confusing if you don't understand that, because you're thinking, hey, I went in and I bought this, expiration contract, and the market was way up here. Like let's say this would be a good example. We'll back up a little bit, and we'll say, I bought the 10 o'clock, buy, okay, and or I sold the 10 o'clock, okay, and I'm trying to, what's the best way to put this? We'll say I bought the 10 o'clock, okay. And so I go over here and I sold the 10 o'clock. And I go over here, I sold the 10 o'clock, and we'll say the strike is, 81. Okay? 0.15. So 81.15, I sold that strike for the 10 o'clock expiration. And you go over here and it says, hey, let's say this bar was closed, or it is closed right now. So it's 81, 08 or 09. But Nadex is saying the thing, expired at 81.17. And I'm looking right here. It says 10 o'clock, and it says 81, 08. So why are they screwing with the prices, and why is it, all those ticks lower than where it really is? Well, because that's 10 to 11. So the close of this bar is representative of 11 o'clock. So if you wanted to see the representation of a 10 a.m. expiration, you need to look at the close of the 9 a.m. bar, or the, potentially say the open, but really technically the close of the 9 a.m. bar on Thinkorswim would be the 10 a.m. expiration, because that bar closed at 10 o'clock. It opened at 9, closed at 10 when it has a 9 o'clock timestamp on Thinkorswim. On NinjaTrader, this bar would actually show as 10 o'clock because it showed 9 to 10. So not understanding that, you can look at the prices and really think there's a massive discrepancy because you don't understand that you're looking at a timestamp of an open versus a timestamp of a close. Now, if you're ever confused and you're trying to figure it out and you're not sure, to make life a lot easier, just break it down. Go in and look, at a 1 minute chart. Okay, because then it'll be a lot more apparent, right? Because if I was looking for the 10 o'clock, even if it was the open or close or whatever. So if I scroll on back over here, see my bar got over there. So I scroll on back over here. Then when I go look at it, I don't have this big, 1 hour gap in time. I have a 1 minute gap in time. Okay, so then I can see that like approximate area of price action in that 1 minute. And so even though that's real, like on Thinkorswim, that's 10 o'clock to 10:01. Okay, and on Ninja, that would be 10 to 10:01. It showed 10:01 instead of 10 o'clock. Okay, so really this bar's close would be the representation, but at least I wouldn't see this massive difference in the bar and get completely confused. So if you're not sure, just go down to a smaller time frame and see it. But just as a tip for you, Thinkorswim plots the opening time of the bar, and that may be a style setting. I know Thinkorswim has like 10,000 settings, but just the standard default at least shows the open time, whereas Ninja shows the close time. And you can probably change it in either one. And I recommend using the close time, especially if you're trading, an expiration type contract, so that way your times on your stamps match up with, the times on the contracts. Anyway, so that was sort of a side note, but it's something that just came to my mind, and this trader, he was just irately pissed. and I understand it. It sucks when, we lose as traders. And I was like, hey, you want to trade Nadex? You don't want to trade Nadex? That's completely your choice, but I don't want you to go away all pissed off about trading on anything with a false reason. I mean, maybe you just don't like the product. Maybe you love the product, whatever. But you want to have accurate information. I'd say probably half my post online on Facebook, groups and everything, a lot of times it's just creating clarity on misconceptions that traders have. Like Nadex is trading against me. No, they're not trading against you. They're an exchange. They're impartial. That's the point of an exchange. The market maker is manipulating the price. No, it's a Black-Scholes delta formula. All it is a call option of a delta. The delta of a call option. If they manipulate the price, they create what's called arbitrage, and they get hurt. It's just how the pricing works. It's how implied volatility works. And a lot of it's just coming in and just not having experience in options markets, not having experience in implied volatility, not understanding how market makers work. And all of us have to learn it. I mean, I didn't know all that stuff. I had to learn that over time for mentors to help me learn it. So anyways, that's one fun lesson of the day that should help you a little bit. And this is something to always keep in mind when you look at a new platform is what does the timestamp actually represent, the open or the close of the bar? Stay right there. We'll be back right after this break. Alrighty, folks, going back here to the Diagnostic Trading Hour. So like I was mentioning, traders can get upset quite often when something happens and they don't know why it happened, and therefore they assume that somebody is hosing them. So we've clarified understanding actually how to read the timestamps on entry bars. And another thing is to understand what the settlement price is. Where does it come from? Why is it done? Okay. So, it's not, because some people think, oh, it's just somebody trying to manipulate the price on me. Okay. And that's not the purpose. It's actually the exact opposite. And let me just I'm going to pull up CME just as an example. Let's see here. That's settlements. So if we can find the settlement procedure. There we go. Okay, so what it says they do on this is a CME group. So I want to show you this. It's not just like, oh, this Nadex company. And I want to show you like this is what regulated exchanges do on purpose. The daily settlement of the S&P, they go down here. They take the lead month and they take what's called the volume weighted average price of all trades executed in the full size future contracts on the trading floor and in the E-mini futures contracts executed on the CME Globex. So we calculated for a designated leading month. And they'll look at it from basically the last 30 seconds of trading. Okay, so from 14:30 to 4:15 Eastern time. And then it says that they'll add in a multiplier 5 to apply to the quantities of the full size contract to reflect a 5-to-1 relationship between the full sized and the E-mini. So that gets all, that sounds, what does that mean? What does that VWAP mean? How does that actually work? And I think I have, let's see, let me pull up over here. Give me 1 second. I think I have an actual example and of how this process works. Right over here. And perfect. Okay, so right here at the bottom on the deviation levels, I talk about an example of volume weighted average price, where the settlement number comes from that we use for deviations. So this is just a simple example. But let's say in the last 30 seconds of trading, the S&P traded at 1400, 1400.2.5, 0.5, 0.75, 1401, and then just bumped up to 1404. Like the last trade was 1404. You can notice that's like a 3-point jump. Okay? Well, that big jump could be somebody slamming into some contracts right in the last millisecond to try to manipulate the price if it was based on just the last trade. Okay? So you don't want last trade because one person could just go in and put there's like little to no liquidity. They go and they put a buy in and they take the sell on the other side in another account. Boom, they've just bumped the price. You don't want somebody to be able to manipulate the price that jacks with your settlement, which can affect options and whether they expire in the money or out of the money and all sorts of, fun stuff. So what they do is they take every price it was traded at, this is CME, every price that was traded at in the last 30 seconds there, they multiply it times the volume traded at that price. Okay? And they get the weighted value, which is the price and how many contracts during that last 30 seconds were traded at that price. Okay? They do that for each price. So it's traded at 1400.25, 12,000 contracts equals, 16 whatever. And it's, big number. Anyway, so and then they add up that weighted value, the price times the volume, and they get a sum of the weighted value. So just add those numbers together, all the prices traded by all the volume for every price, what's that sum total? And they divide it by the total volume in the last 30 seconds. And that gives them a number of 1400.25. Notice there was 12,000 contracts traded at 1400.25. So that obviously really helped pull that average. And there was 7,000 at 1400. And then there's, was this about 7,400, whatever, down here. So that 7,000 up there, 12,000. The average price, rounded off, 1400.25 became the settlement value. So it wasn't the last price, it was the volume weighted average price. So that is an example of a settlement calculation. Again, that's done to prevent market manipulation on settlement values. So what does Nadex do? Okay, so they're an exchange. They're regulated by the CFTC, and so they have a settlement calculation. We'll talk about that in the next segment. Stay right there. We'll be right back. Alrighty, folks, we're going back here to the Diagnostic Trading Hour. And so we're talking about Nadex, and we're talking about settlement, okay? And let's see, settlement. Let's see if we can find just the easy. I know there's some of the questions over here, I think. Trading, and then we'll go into settle. Where do they put their settlement? There we go. Now that's the settlement value as of expiration. What about the calculation? Let's see here. I know what the rules are. I was just going to see if I can find them for you. Okay. All right. The summary of settlement is. Oh, and here we go. Expiration value. We'll have that. Expiration value. So over here on the Nadex glossary, and on stock indices and on commodities. Okay, so not Forex pairs, but everything else. Well, yeah. Well, everything but Bitcoin and Forex pairs. So on stock indices and commodities, they take the last 25 trades, okay, of that market. ES, ZC, GC, CL, whatever. Take the last 25 trades. It doesn't matter if they had 100,000 contracts or one. All right. So, but like if somebody I said buy 100,000 at X price, that's one. Okay. So the last 25 trades that took place, and they take the 5 highest prices that were traded out of the last 25 trades, and the 5 lowest trades that were placed in the last 25 trades. Okay? They take them out of the equation. They then take the average of the remaining 15 prices and round it to 1 decimal point past basically the tick size of the underlying market. The only exception is the Dow, which is in whole numbers, okay? Where they round it to the same point as the underlying market. So taking that average 15. Why is that good? Is that messing with you? Is that helping you? Is it hurting you? Yeah, because basically somebody could go in and they could try to hammer a few trades at the end, and they would, like if they were the 5 highest or 5 lowest, they wouldn't be counted, okay? They'd have to literally have the last 25 trades out of the other thousands and thousands of trades that are coming through. It'd be the last 25 trades, which would be very dangerous, okay, to have any kind of impact. And they have to actually get executed, not just submitted, okay? So they have to take out all the volume, and they'd have to place the last 25 trades to actually have a value on that, which would require a lot of trades to actually move the price somewhere. So it makes it where somebody basically can't easily come in and impact the price without taking on substantial risk, which would not be worth it for a binary or spread to try to do that. I mean, because we're talking easy 10, or not 10, but 5, 6, 7, 8 figure risk that it could actually cause to manipulate the price that much. So that's how the indices work, and that's why they do it. So somebody can't go in and just throw on a trade at the last minute, and it just randomly gets filled, and all of a sudden you get totally hosed because it's 4 points off. You may have felt this if you've ever done rut iron condors on the rut, the classic rut iron condors, and it expires. Like you look at the market, it closes one day, but then they take all 2,000 stocks and they do this funky settlement procedure, and then all of a sudden it's 30 points higher on the settlement the next day when it opens, and you thought you were golden, and you're down a fortune. I know some pairs that's happened to, and fortunately they taught me about that, and I learned to never hold an iron a short option into expiration on on the rut because of the weird settlement process that they use. And this can even upset some people on stock indices because they have to go in, and it messes with end-of-day expirations a little bit because they have to go in and they have to get all the stocks after they close and calculate them all out to get that final thing. And that's the nice thing about doing the futures on this instead of cash. That's what I love about Nadex using the futures instead of the cash, because if you're setting like on the Dow Jones Industrial Average, well then they that's only 30. It's not as bad. But they go in and they get all 30 stocks. They make sure they all close out. They count all trades out, and they get all that, and they put all that together. It's a really weird settlement procedure, and it can really mess with the final result if it's close for you. Maybe good, maybe bad. But futures, I mean, it's the last 25 trades done over, okay? Very simple, very easy. Average the middle 15. There's your settlement price. And they display that price, even though it's not the official settlement, because, there could be like a, 300 millisecond delay. There could, whatever. There could be a delay, half a second of that data updating on your screen. So it's not the official settlement, but it's going to be dang close, okay? Or very close. The Forex contracts are a little bit different because just how Forex works. Okay, Forex can have really wide bid-offer spreads at times. or really narrow bid offer spread. I mean, it could be super narrow bid offer spreads, or it could be super wide. I think S and B. I mean, there's like sometimes like 5, 10, 20, 30 wide bid offer spread on some instruments whenever that big S&B crash happened earlier this year, after the Swiss National Bank announced that they were letting go of the support of the floor of the euro yen. So what do they do to help balance out the constant varying width of prices? And, how do you choose last execution on Forex when it's an over-the-counter, contract? Like, who's last execution? At what broker? At what bank? Right? So what they do is they take the last 10 quotes on that Forex pair, okay? And they average the bid and offer. So if the bid is 100 and the offer is 104, I'm just giving a really weird example, but 100, 104, average 102, okay? That mid quote, it's called the mid quote, whatever's the bid plus offer divided by 2. Take the average of those prices. That's the mid price. They take the last 10 average quotes, okay? And they remove the 3 highest and the 3 lowest mid quotes. Okay? And they then take the arithmetic average of the remaining 4 prices, those middle 4 prices, and they round them to 1 decimal past the point of precision. So like, Euro USD has, 4 decimal quote, 4 pips, point, 1 point, whatever, 0.0000. They get 1 more decimal past that, and they'll round the number up to that 1 decimal point past that, okay? And that becomes the settlement value of the Forex contract. And that's one of the reasons why I love trading spreads, because I don't care about a tenth of a pip. It doesn't make or break anything. It means 10 cents. On a binary, it can mean all or nothing. So that's where it's not that they're manipulating it. They're trying to actually avoid the manipulation of it, and they're trying to use the mid prices, because like, whose last quote are you going to take from what bank? Okay. And last I heard, they use Reuters. I think they may have Bloomberg as well as a backup data feed. But Reuters is an industry standard. Okay. So they're getting all the multiple bank feeds in, best quotes, bid offer. What's the mid price of that? And that's the data feed they use to calculate it. So if it seems like, well, man, it seems like this will often happen. This really happens a lot on Forex. And we can even pull up. Let's see here. Close that out. Let me see. I know I had open. Where is it at? All right, here, give me 1 second. I'm going to pull this up for you. And what we'll do is we're going to look at a quote on Nadex, on Forex. And then we're going to look at a quote like, say, on Thinkorswim. And we'll do the same thing on some of the other contracts, just to help you understand, what a settlement price is. And all I got to do this is I can just open up a ticket. Let me do a tear off ticket for you. Okay. And we tear it off. There we go. Got another screen right there. And then we'll open up Thinkorswim, and let's pull up. We got Aussie dollar. Happen to be the one I chose. I'm going to choose Aussie dollar. And notice we got like 77.025 or so. Or I could even go into the Forex Trader tab. Somehow or another, I lost my ticket there. Where'd it go? Come. Make this large enough so you can actually see it. Here, I'll drag that up. Maximize Thinkorswim. I don't know if this is going to be super easy to see, but at least it'll be bigger numbers than the other one. But 77.02 by 77.04, and this is sort of an important thing to see. And look how we're seeing 77.034. Okay, that's the indicative right now. 77.03, 77.02. So it's moving down. See how that's moving down. 77.01, right in between the average of 7,700 and 77.02. Okay. Now remember, it's taking the last 10, dropping the high four in the bottom or high 3 and bottom 3 and average in the middle 4. So it'll be it won't be like right in the center because it's out of the last 10, the middle 4 quotes dropping the top 3 and bottom 3. Now, if we look at that, let me see if it will let me do this. You know, I think I could do it over here on the chart tab. And we got Aussie dollar. Here we go. Okay, and that, yeah, that's good because that'll actually let me see. I'm just trying to see if that's accurate. 01 by 03. Don't even quite show the same thing in the chart tab there on Thinkorswim. Trying to trade block, see if it'll show me bid and offer. There we go. Okay, 7703 by 7705. Anyway, so the chart is plotting right now 7701. What does that chart represent? Because you may want to make sure. Remember, I taught you in the first segment about looking at the bar timestamp. Okay, to know, you know, what is that? Is that the open of the bar? Is that the close of the bar? You know, what is that actual timestamp? So, I mean, it could represent, you know, in this case, 12 to 1, if you're looking at an hourly chart, or it could represent, you know, 1 to 2. You know, just, you need to look at it. You want to make sure you understand exactly what it means. You can go into your settings tab, and you go over here to Forex, and you can say, what do I want to look at? Do I want to look at the bid on my chart? The ask on my chart, the mark on my chart, or the last on my chart? So the bid is going to show what the current bid is of that market. That makes sense, okay? Ask will show what the current, you know, offer price ask is of the market. Mark would show that middle. So what if I chose, you know, the middle of it and then zoomed in? It's going to be a little bit different. Now it's going to show me the average of the bid and the offer. I don't know why it keeps wanting to maximize underneath. But here we can just resize. Put this over here. Make this big over here. So I know you probably can't exactly see that because the charts just really aren't massive on their font size. But right now it's quoting, say, 7702. If I go and I change the setting, it'll probably move on me. But if I change the setting here, showing at 7702. Still showing 7702, so I hit that, hit apply. Now I see 7701. I see the bid price. If I go over and I say, show me the ask, still sitting at 7701 on the bid. Now I see 7703, and still sitting at 7703. I go to the mark price, I hit apply, and now I'm seeing 7702 right in the middle. Okay, so if I'm looking at my chart and I'm trying to compare against what I think the settlement should be, okay, am I looking at last trade, which actually makes sense somewhat for, you know, futures because it's the last 25 trades. You know, dropping the high 5 and the low 5 and averaging the middle 15. But on Forex, it's not the last trade. It's the average of the mid price. So, and some people may even have the last as their option on Forex. Hit apply. And now it looks really weird. Why does it look so weird? Well, because those are the actual trades that have happened on Thinkorswim. All right, and so this brings up a really good representation. See all these, you just barely see anything charting on here, a lot of dots everywhere. Okay, those are the trades that happened on Thinkorswim, where traders place trades through that brokerage. Okay, the market moved obviously all through that. You can sort of see the little specks where a little trade was placed here and there, and then you can see where a lot of trades were placed. So that's why I said, how do you use last on Forex when it's over the counter? What broker do you use? Do you use FXCM? Do you use GFT? Do you use MTB? Do you use, you know, Alpari? Do you, I mean, we can just go on down the list, down the list, down the list. Okay? Whose last quote, last price, not last quote, but last trade do you use? Because it's over the counter. It's not exchange-based. Forex is not, unless you're trading on CME. So we'll continue this lesson when we get back. But these are little small lessons that make things a little bit more clear. And I hope you're picking up a few of them. All right, we'll be back right after this break. All right, welcome on back to the Diagnostic Trading Hour. We've been talking about misconceptions on several things. One of those being timestamps on bars, which can throw you off, especially when you're dealing with intraday contracts or comparing one platform to another. The other thing we were talking about was how settlement is calculated on exchanges and why it's done to actually help reduce manipulation in price versus be a manipulation of the price, which is a common misunderstanding. And the third thing is understanding it specifically to Forex and why they use mid price, because the bids and offers can jump around so widely, and that averages it off by keeping it in the middle. It doesn't matter if the bid goes to 40, bid offer is 40 wide, or if the bid offer is 3 wide, it's still going to be the average middle versus jumping 40 ticks. Okay. We also went into how, if you're looking at a charting platform, it's important to know whether you're looking at the bid, the offer, the mid price, or the last price. And one of the things that we are focusing on right here, such as on Thinkorswim, if you look at last price, what we're going to see is what has actually been traded on Thinkorswim today. Okay, so these are the trades that Thinkorswim traders have been placing on the Aussie dollar. Obviously, that chart is not near as clean as going in and plotting what the bid and offers have been all day, or on the life of the chart. So you can put bid, you can put offer, you can put mark. Well, if you're looking at, you're trying to compare settlement on, say, Nadex to live markets, then on Forex, you need to be looking at, mid, but on futures, you need to be looking at last, because futures use the last price, Forex uses a mid price. The other thing that's important to note is when you're looking at this, understand Forex is not exchange-based. Spot Forex is not exchange-based. Now, CME is exchange-based, Nadex is exchange-based, but Spot Forex is not exchange-based, and therefore different bank feeds. So, a lot of different banks, they make quotes on currencies, okay? Different bank feeds will cause there to be a little bit difference in price. So usually it's very small. If it's not small, then there's arbitrage there. But usually it's very small, but there can easily be a difference in price. So your FXCM feed or Thinkorswim feed or whoever it is you're using feed may be a little bit different, okay? And that's one advantage of having that indicative already, plotting up there for you to give you a good idea. One of the last big tips I want to give you today on the show is to be aware of time zones. One is a lot of stuff is just published in Eastern time, so that's very helpful, or Central or Eastern. But the big thing is, let's say you are a Nadex trader, okay? And I'm not saying just a Nadex, but let's say you also trade Nadex or you're learning Nadex or whatever. What I have found is a best practice. I don't live in the Eastern time zone, okay? But all the Nadex contracts are quoted. Their time is Eastern time. So to avoid my confusion of looking at the wrong time and thinking that I got 30 minutes left or 2 hours or 3 o'clock, I think it'll hit here, and I'm really looking at the wrong time, I make sure my charts are in Eastern time. So in Thinkorswim, you can go and you can choose in the settings. You can actually choose what you want your time zone to be. NinjaTrader, for example, if you're using it, it will match your computer clock time. So if you want it to be Eastern time, you have to change your computer to Eastern time, close and open Ninja. It'll be in Eastern time, and it avoids a lot of confusion. All right, well, I hope you all picked up a few tips today. These are just sort of random comments on these lessons, but ones that I've found, are important and that can help you understand what's going on and why, and have a little clearer picture of the little things that can add up to, big impacts on your trading. All right, this has been Daryl Martin here on the Diagnostic Trading Hour, and I hope you all have an excellent day, and I will see you tomorrow right here at the same time, 12 o'clock Eastern. Y'all have a great day.